Happy New Year! Welcome to the December 31st, 2021 video version of the Wagner Daily. My name is Rick Petticelli. As usual, once a week, this video replaces the written commentary portion of our nightly report. Hopefully serves a nice change of pace and offers some insight as to how we set up our charts. As you can see, we try to keep it pretty simple. We have a few key moving averages, relative strength line here versus the S&P 500 and volume. Price is king. Moving averages and volume help guide us along the way. So with that out of the way, let's get to the charts. First up is the NASDAQ composite, which after generating a buy signal by reclaiming the 20 and 50 day EMAs on 1223 and 1227, hasn't done much of anything, just chopping around, digesting the recent advance. The biggest issue we have with the current move off the lows is the lack of leadership. Semiconductors are doing most of the work, and we're seeing more strength in REITs and utilities. Technically speaking, the NASDAQ did clear a prior swing high, negating the trend of lower highs and lower lows. As long as it holds above the 20 and 50 here around this 15,500 area, it should be in good shape technically in terms of our buy signal. But again, there's just not a lot to get excited about in terms of setups and leadership right now. The S&P 500 moved to new highs, but it also has leadership issues. This is an index that has very few stocks doing most of the work. And as of Thursday's close, looks like it could be vulnerable to a short-term sell-off down to the 10-day EMA and breakout pivot. QQQ looking pretty much like the NASDAQ composite. Still struggling with the 400 level. And this is where it gets ugly. IWM has yet to reclaim the 50 MA. Still struggling with the 200. That's a small cap Russell. IWP is a mid cap growth. Also below the 50, above the 200 though. FFTY, another growth ETF, below the 50 and the 200. And we have ARC, which is another growth-based ETF. And that just looks really ugly. Broke down below a clear support level at 100. Broke clear support at 110 first. And now it's struggling with the declining 20-day EMA, with the 21, 50, and 200 all trending lower. So in terms of what we like to trade, which is aggressive growth, this is not an ideal market. And the recent buy signal didn't do much to improve that. Again, most of the leadership there is coming from big cap S&P and Qs. And while the timing model is great at preventing us from going against the trend, it's based on technicals. And so there's certain things that have to be there for us to go along. We also have the component that's very discretionary, and where we're looking for specific setups that are trading near 52-week highs. We're looking for clean charts. We're looking for stocks that have based out for several weeks, 5 to 10 weeks. We're looking for strong groups and leading stocks within those groups. Some of these stocks are ones that have gapped up to new highs on big volume post earnings. If they didn't move out right away, maybe they chop for a few weeks and then move higher. And all of that is what we look for after a follow-through day buy signal, and is something we're not seeing right now, with the exception of the semiconductor group. So overall, we're on a buy signal. The S&P's at new highs. Other indices are lagging. It's not a great buy signal, and we're being selective with new entries and keeping it tight with in terms of risk. So on to current positions in the model portfolio. We're still long ANET with a 4% gain. We'll likely hold on to ANET as long as it's able to remain above the 10-day MA. AMAT we sold for a small loss as it broke the 1228 low, and that was through an intraday alert. If it does pull back to the 10 in reverse, we'll look to re-enter, but for now we're out. We're also going to cancel that buy stop limit order that's in place above the 1229 high. AMD we also sold at 145.55 on Thursday, and the reason being is that the price action pulled back to our original entry around 145, and our ad at 150 was underwater by 2.5% or so. We felt it was best to exit near break even and just start all over again. Monitor the price action for a new entry point. There's no need to sit in a position and hope that things work out when we feel that conditions aren't ideal. And last up here is MU, Micron Technologies. We're long from buy entry above 91. This is the one stock we're going to try and hold, though basically we're looking for the price to stay above the 10-day MA. We're going to place our stop just beneath the low of this big up day on 12/23. So just around 90, and we'll see if the price does pull back and if it can hold the 10 and continue to push higher. So we're still long ANET and MU. We just stopped out of AMD and AMAT. Speaking of AMD, NVIDIA had an inside day, and it's holding this downtrend line. So if it can turn tail here and push through the 305 area, it could be in play. Other stocks we're looking at, PI potentially in play over this 2-day high here around 92. PANW in play over the 2-day high. Little pullback here. MRVL in play over the 2-day high. ARCB could be in play on a pullback. Nothing yet though. It's in no man's land. Still above the 10-day EMA, and no real reversal signal either. Wire's looking pretty good. It broke this downtrend line and it's just chopping around here. Ford's struggling with this 21 area, but if it can punch through 21.20 on a pickup in volume, it could get interesting. AMAT, we're watching for a reversal candle in this 10 to 20 EMA area. FFIV, one to watch for a pullback around the rising 10-day EMA. Tesla's pulled back to the 50. Have to see how it acts around the 50. Given the lack of follow through and setups overall over the past few days, might be worth holding off on Tesla and looking for the price action to push through this downtrend line on volume. Alphabet, not a fast mover, but it's shopping around a tight range. If it can get through this 2-day high, could spark some buying interest. SMAR, undercut of the prior low in this 32% deep pullback. Pretty solid move off the lows, forming a handle type area here. Something to keep an eye on. And FTNT, looking for a pullback entry off the 10-day EMA, see how it reacts around there. So just a quick recap. Market timing model is on a buy signal. Leadership is narrow and coming from bigger cap tech and REITs and utilities, which doesn't inspire a ton of confidence. Can the S&P and NASDAQ continue to climb higher? Oh, absolutely. And in that case, we'll continue to do as we've been doing the past week or two, pick our spots carefully, try to find stocks that are showing patterns that we can trade within our system. We don't want to start doing things that are out of the ordinary, but we also realize that market conditions are not ideal for what we do right now, so we're going to keep it light and take it day by day. So that's a wrap for tonight's video. So once again, Happy New Year. Have a safe weekend, and just a reminder, the markets are open on Friday.